Hey everyone, I am back with another dividend stock investing video. I am so excited to share a stock in the video today that I am now purchasing almost every week. This is a top 10 core favorite dividend stock of mine, but it is under pressure right now. There is pressure coming in two main ways. It's on the front of unions. It's also on the front of some political pressures in China. Of course, I'm talking about Starbucks. I want to go through Starbucks today. I want to go through some of the news, and I want to illuminate how this news affects not only Starbucks, but dividend stock investing in general. Because there are some takeaways from this situation. There are some important takeaways that all of us as investors ought to think through. Get ready, everyone, for a really exciting dividend stock investing video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So I want to start with the statistics today, and then I'm going to get into some of my thoughts and some lessons I have learned about Starbucks over the past few weeks. As you can see in front of you right now, this screenshot illuminates my purchase price that I achieved this Monday, and so I purchased more shares at $87.44 on Monday. My patrons already know this because I share all of my stock trades over on Patreon. I will link to that in the pinned comment below. I have so much bonus content and value over there on Patreon. You might want to check it out, but the price I paid this Monday was $87.44, and that was 10% higher than what I paid just a week ago at $78.99. Now, I feel both of these are good prices because even at $87.44, it is 31% lower than the 52-week high of $126.32. Based on the EPS estimates for 2022 and 2023, this stock is currently trading at a forward 2022 PE of 26 and a forward 2023 PE of 22. I highlight 22 because that is a pretty low forward PE for Starbucks, given how quickly the company is growing. This is a company on a growth trajectory. You can see on the stock chart that it's been up and to the right over the last 5 years. If I look at the maximum time period, it looks even better. But of course, it is coming off of its highs. We're going to get into some of those pressures today, why it is facing some challenges. Now, the dividend per quarter is 49 cents or $1.96 a year. The starting yield is 2.24%. or a payout ratio of 58.86%. Now, that starting dividend yield of 2.24% may not seem like a lot, but based on the 5-year average compound annual growth rate of the dividend being 14.4%, if I assume they can keep that up for another 5 years, the yield on cost just 5 years out is a 4.39%. And so that is why investors, dividend investors like myself, like this stock so much, because the compound annual growth rate of the dividend is off the charts. It's really high, and if they can keep that up, of course, there is opportunity there for really strong dividend yield on cost. Now, the market cap is just under $100 billion. It is $99 billion. And so this is a stock right now that I am buying almost every week. I am buying a handful of stocks right now almost every week because I'm seeing core dividend stocks that I love so much going on sale. They're going on sale for different reasons. I think at a macro level, we're facing some challenges just from a geopolitical standpoint with the war, the unfortunate war that is ongoing right now in Ukraine. I think we're facing overall rapid inflation, and as a result, the Federal Reserve here in the United States is likely going to be increasing interest rates. And so I think many are fearful of a recession. I think from a macro perspective, a lot of companies right now are facing higher input costs, and investors are concerned about that. I think consumers are concerned as well. Can they even afford the cost of living going forward? And so there are a lot of macroeconomic issues that are pushing prices and valuations on core stocks like Starbucks to levels where I feel comfortable buying, and I'm going after those on a weekly basis. But as it pertains to Starbucks, there are also some very precise things that are going on at Starbucks. One is we're seeing stores around the country here in the United States, they are voting in many cases to unionize. And so that is a big political pressure right now, a big store level issue that Starbucks is facing. They just brought back in Howard Schultz as their interim CEO. I think as a result of what's happening at the company and in hopes that he can fix some of these challenges. The other big challenge that Starbucks is facing as a company level is they're very dependent on China for their growth. But there have been some issues in China recently, some issues, I would say, a culture clash in some ways, where they have allegedly made some mistakes in how they treated government officials in China, some police officers that were dining at their restaurant. And so actually what I want to do is I want to get into some of that news right away so that you can know what's going on at Starbucks, and then I want to interpret the news for all of you as well. I got a lot going on in the video today, so hang tight, everyone. So as you can see on the screen right now in front of you, the first thing I want to do is I want to go through some of the news. And so the first thing that I want to share is basically the Starbucks misunderstanding with the Chinese police. Because we've all heard about the unionization. I think that's pretty apparent what's happening in the United States. I think that's a non-issue. I'm going to get into that a little bit later, why I think that's the case. But this is something that a lot of folks haven't heard as much about, but that I'm very concerned about. And I think it is a real business risk, unlike the unionization. And again, I'll get to the unions in a minute. But basically, there were some police officers that were dining at a Starbucks store in China. They had arrived right before the store was going to close. And so the people that worked at the store were basically saying, hey, could you please eat outside? We're going to keep the tables open outside for you because we're closing up shop inside because it's about 5 p.m. We're going to be closing soon. Now, some other patrons showed up at the store, to my understanding, and there was a sense of confusion, like, why were there people still eating there when you guys are closing? I think there was some kind of just confusion, and I believe that the Chinese police officers felt like the employees at the store were right after they told them to eat outside that they had to leave or something like that. Well, anyways, in China, the media in this particular geography where this happened, this southwestern city, there's a state-run newspaper. And in terms of the state-run newspaper, they basically wrote up Starbucks, and they're like, hey, Starbucks, shame on you for doing that to our government officials, our police officers. And so what I'd like to say is we've got a liberal Seattle-based coffee chain doing business in a communist country that has very different paradigms, very different ways of life than here in the United States, and especially here in the Seattle area. And I think that that's a business risk for China. I think the bigger business risk from a geopolitical standpoint is we see a world in turmoil right now. And China has a decision. Are they going to stay kind of where they are? Are they going to side with the US? Are they going to side with Russia? How that plays out could very well depend on how companies like Starbucks that do business in China are treated. And so I think there's a lot of geopolitical uncertainty right now as it is pertaining to Starbucks doing business in China. I think that's the biggest issue, honestly, that is at risk right now, because the growth in China has been off the charts. That is one of the biggest, if not the biggest, growth driver for Starbucks. And so that's a big tidbit of news I think you ought to know about if you don't already, because there's a risk with any investment. Now, I want to get into how I'm interpreting this and some other things that are happening. This is really important. I want to preface this with, please don't get offended, because I'm sharing some stuff here that is, I would say, worst case. As an investor, I like to think about worst case. What could happen in the worst case? And so I'm not saying it will pan out like this. but you never know, and so I want to go through a few things. By the way, if you enjoyed the video so far, please go ahead and smash the like button. It means the world to me. I already shared this with my patrons, but just about a week ago, I threw out my back in the move. I'm in our old residence here. We're between homes. We're still doing our move. It's a lot of work, and thank you for your support. If you love these videos, if you smash the like button, if you go ahead and subscribe with the notification bell, it means the world to me. It's the best way you can thank me. And of course, comments below are always appreciated. I do attempt to read and respond to all of them, especially the ones that come in the first few days after I publish a video. Anyway, check it out in front of you right now on the screen. I want to share some thoughts. And these videos, they take me a while to produce because I don't want to produce it until all of my thoughts are fully formulated. And it was just this morning that I really got this on paper and I felt good about it. Well, I don't know if I feel good about it. I feel good in the logic, but I don't know if I feel good about the future. Point number one. The future is generally bright for Starbucks and other large world-class companies in our winner-takes-all society. And so this is just a macro level point that I want to share. I want to share this because so many investors on this channel are dividend investors, and they say, Ian, I would never spend $5 on a coffee. I would like to say, unfortunately, the subsegment of people watching this channel is a small sliver of society. We are not representative of most people in society. Most people in society, believe it or not, will spend their last $5 that they have on a Starbucks coffee because it is a simple pleasure that is a really exciting experience for them. And so I just want you to be careful at home. Don't take your own biases into this equation because most of society is not like dividend investors. Now, I'm aiming to change that with this channel. I want the dividend stock investing message to reach more people. But I think it's very important to understand point number one, this backdrop, which leads us into point number two, as you can see on the screen in front of you right now. And so the next point I want to share is, in my opinion, unions do not matter at all in the long term. They may even accelerate tech-based margin expansion. And so this is really, really, really important. In my humble opinion, if this unionization continues, Starbucks and other fast food restaurants are going to adopt robots. They will replace all of the workers in the stores with robots as fast as they can humanly do so, and it will expand margins in the end. It will probably provide a better customer experience. This is sad. I don't think those who work at the stores, I'm not trying to put you down either. I love baristas. Every time I'm at Starbucks, I aim to add a tip to our tab, and I am there a lot. I respect the baristas. I unfortunately feel that some baristas who are at these stores who are being told by this, that, and the other, the media, if you will, the biased, the misleading media out there, they're being told to unionize. It's the right thing. But quite frankly, I don't think they're thinking about the long term. Maybe in the short run, people unionize and they can bump their pay up a little bit, their benefits up a little bit. Quite frankly, I feel like Starbucks has already made a best effort with their partners to offer amazing comp, especially as compared to other options out there. But I don't work there, and so I guess I cannot comment on that because I haven't been in the shoes of someone who is a barista. But what I'm saying is think about the long term. If everyone unionizes, Starbucks will use technology to replace everyone, and it will just be robots, and everyone will be out of a job. Again, I know this may be controversial, but I'm just trying to build a story here on what could happen. And to that end, as you can see in front of you on the screen right now, this is an article that I will link to in the pinned comment below. This is from Mashable. They wrote a really good article on the big ways robots are quietly taking over fast food. And from this article, you can see already robots are being tested at fast food restaurants. Another one is McDonald's, which is a stock that I own. And McDonald's in Chicago is already testing voice ordering technology. We already know, quite frankly, that McDonald's has acquired a whole bunch of technology companies and opened a technology division in effort to automate. And so we are seeing that fast food restaurants are automating. And as you can see on the screen in front of you right now, this is just another screenshot from that article, which I will link to in the pinned comment below, that Taco Bell, KFC, Domino's, they are turning to robots. And what they're saying towards the end of the article is, quite frankly, the robots can work long hours. They don't require sick days. And so, boy, I was at the airport the other day in Idaho, and they have a burger place there. I think it's called Smash Burger, and I get a burger there once in a while, and it has a kiosk just like the one you see in the picture on the screen right here, where you're ordering just from the screen. You don't have to interact with an employee for ordering the food. And so I just started doing a Google search, and I know there's some really fancy robots out there, but one last screenshot I want to share is just, as you can see on the screen in front of you right now, there is a robot here called Matradee, and this one is just to replace waiters basically. And again, I know this could be a controversial video. I'm not trying to put down folks. I have a friend on this channel who's a bartender in SF, my friend Ivan, and he's attended some of my meetups that I used to have in San Francisco. A buddy of mine, shout out Ivan if you're watching today, my friend. I am not trying to put down anyone, because this is dividend investing for everyone. We got baristas here, we have waiters here, we have bartenders here, we have cooks here, chefs here, all of the above. But what I'm just trying to say, I'm not saying I agree or disagree with this, I'm just trying to point out what could happen over time based on politics, based on unionization. And I don't think people who are voting for these unions are thinking about the long term. And to that end, I want to get to the next point. As you can see on the screen in front of you right now, check it out. What I have here is, this is really point 2A, I guess, but technology always wins. We've seen this with the iPhone. In terms of full disclosure, I'm on Apple. I'm on my Apple laptop right now reading these points to you, and the pace of innovation is astounding. And I would say the robot-based experience, it will be as good or even better than the human-based experience. We know that technology wins. We know American innovation, global innovation is amazing. And just think, I go to Starbucks sometimes and they make my drink bad. Usually when it's a new barista who's getting up to speed. You know, it's expensive, my drinks there. I don't like it when that happens. Well, just think, if a robot makes it, it'll never be messed up again. Also, the wait times will be even less. I would say technology will always win. And to the extent these robots become even more human-like, you can still have that cafe-like experience. I was reading an article that sometimes the robots can do better in face of adversity. If you have an angry customer coming in who's kind of a little rough or a little mean, the humans sometimes can get into a squabble with them, whereas the robots, they can be programmed to handle that kind of customer. Let's keep going. As you can see on the screen in front of you right now, I want to take this to its logical conclusion. Hang with me here, everyone. Hang with me. This is important stuff. 2B, dividend, or the dividend, the divide between the rich and the poor will be greater. I guess the dividend between the rich and the poor will be greater too. This is really, really important. On average, I said it in point 1, people will always spend their last $5 on a $5 coffee. So it doesn't matter. Again, I'm just speaking to human nature. I'm not trying to put anyone down, but I'm saying if the poor get poorer, if there are more people that are poor, they will always buy this Starbucks coffee. That is my humble opinion. I could be completely wrong, but that's what history has told me. Now, Starbucks will be fine here, folks. Starbucks will be fine. You're starting to see the picture here. McDonald's will be fine. Apple will be fine. Other companies will be fine. The people who will not be fine will be those that fall into the poor bucket when this divide gets bigger. This divide could get bigger again because of unionization, because of the unions. And so let's keep going. I want to keep bringing this to its logical conclusion. I have a few more points. You'll see this builds into a storyline. So these are my first few points. Let's keep going. As you can see in front of you right now, the next point I want to make about Starbucks. I'm going to switch over to China just for a little bit. The China risk is very real. We talked about this already. China is a growth market for Starbucks. Starbucks has faced setbacks by inadvertently insulting the police and getting written up in a state-sponsored newspaper. So keep in mind that, and I'll explain this more in a minute, unions I'm not so worried about. China, I think it's a real risk for Starbucks, but hopefully they'll figure that out. They'll figure out how to play the political game. That being said, in point 3A, as you can see on the screen right now, the China risk could get worse. If there is more global turmoil, if China chooses sides here and they don't choose the side of the US, that could be a blow to Starbucks, to their stock, to their company. Now, I am As an investor, I'm always taking calculated bets. There is no risk-free investment. And typically when a stock is down, it's down for a reason. It's down for a reason now because people are worried about unions in China. You already know my opinion on unions. I'm not so worried because even if that plays out to its fullest extent, and I hope it doesn't, but the baristas could and probably will get replaced by robots. But and I'm talking 10 years out, 15 years out, short term, there could be some gap. There's going to be a gap where they still have baristas and they'll take some financial hit, but they'll make it through it. But China is a real risk, in my humble opinion, especially if China, during the war that is going on right now in Ukraine, if they pick sides, if they go and side with Russia, if something like that happens, there could be a domino chain of events that makes it just a lot more difficult for Starbucks to have their business in China, which could force Starbucks as a company kind of to regress quite a bit from where they're at. Hopefully that doesn't play out. But because there are these risks, I'm able to buy Starbucks at a discount price right now. Now let's keep going. As you can see in front of you right now, I got more to share. I want to go to point 4. Again, all of this is probably controversial today, but I got to just speak the corner cases, because as an investor, you need to think through all the corner cases. The agenda, it's real. Come on. Could those who are supporting all this unionization, so I'm going back to unions. We got through primer on unions, primer on China. Let's talk about unions again. Could people who are be supporting this unionization, are they looking for a society? I'm not talking about the people that work at the store. I think the people that work at the stores are sometimes being played like pawns in a chess game. I'm talking about the chess masters here. I'm talking about the people behind the scenes. I'm talking about the people controlling the media. Could they be pushing for unionization because they want a society where the people are more reliant on the government? Maybe they even know that's what Starbucks and other companies will do. Maybe they even know about the robots. Maybe they want that. Those being pushed to unionize may be taken advantage of here. There are forces right now, maybe I'm wrong, but I'm talking about the corner case, I'm talking about the worst case. There could be forces that are pushing people to vote, suggesting people vote to unionize. They don't have those union members' interests necessarily at heart. Now again, I want to take a pause and I want to say, whether you're in a union or not, this is dividend stock investing for everyone. I want everyone to succeed here. And I pray that the people in the unions, not in the unions, all do well financially. This is a channel about empowering the everyday person, financially speaking, through dividend stock investing. But I'm just trying to provide some contrarian viewpoints that I think are important to think through, because it could help those trying to construct a dividend portfolio, or even those trying to pick a career path, make wise decisions. That is why I am going there. I'm certainly not going there to poke fun at or put down someone that voted to be in a union. If you voted to be in a union, you may know a lot more about it than I do, and maybe you made the best decision. I'm just putting some contrarian viewpoints out there. Now let's keep going. As you can see on the screen in front of you right now, here's where it gets interesting. There could be a tipping point, and this is the risk with the unions. If enough people lose their jobs and become extremely reliant on the government, how could this happen? Well, you push for all this unionization, Starbucks margins get squeezed, Starbucks and other companies get forced just to have robots. There could be a tipping point where so many people are reliant on the system or the government that capitalism fails. Could there be an agenda out there even that wants this to happen? Do you still think sin stocks are sinful, or are there other things out there more sinful than sin stocks? And so anyway, I'm just putting some corner cases. I don't know if it's true or not, but these are the types of things I think about all the time. And so this could be a very risky thing for investors in any companies. If we ever reach this kind of tipping point where the amount of people dependent on the government becomes so dependent on the government that the capitalism and corporations fail, that's where even dividend stock investing would fail. And so it's important to think through all of this. Now, am I going to give up on dividend stock investing? Of course not. This is a corner case. I like to think through all the cases. I like to think through everything. Eyes wide open, as they say. But I don't, will it come to that? Probably not. Hopefully not. I have to live with a positive outlook. I think about all the negatives. I weight them into my investing decisions, but I have to think about the best, the positives going forward. With that, I have one more point. As you can see in front of you right now, the last point I want to share today is about dividend investing being more important than ever. Everyone, our world is changing more than ever before. If any of the logic that I'm talking about today plays out, dividends are one of the only reliable non-government sources of income available to the average everyday person. Of course, the tipping point could be a risk, but it's impossible to live and do nothing, just worrying about it. You have to think about the best case or the plausible case. And in my opinion, building a dividend portfolio right now, this second, is more important than ever. Why? 20 years from now, it may be too late. The way I see our world changing right now is dividend investors building a portfolio to pay living expenses, everyday people trying to free themselves of being dependent on a single employer or a government. Those days are going away. Things are changing in our world right now. And so it's really important, in my humble opinion, to consider dividend stock investing right now. Now, with all of that, I want to head out on a positive note because I know I shared some doom and gloom today. Thank you for hanging in there with me. I think it's important to consider all this. Smash the like button if you enjoyed the video so far. Also, don't forget to subscribe, and I'll see you in the comments. Put your questions below. But I was going through a lot of paperwork because we're moving right now, and I'm going through papers. We're trying to clean stuff up. I want to share a paper or kind of a chart. I shared this on my Instagram, by the way. I'll put a link to my Instagram in the pinned comment below. And so, anyway, I want to share it on the screen right now in front of you. Check it out on the screen. This is something I did back in 2010. And so I've been an OG thug life investor for the longest of times. This is my 3-tiered approach to money. I don't want to go through this in too much detail. Maybe I'll do a standalone video on this at some point, but I just want to share this on the screen right now. This is how I envisioned living off of passive income back in 2010, and my philosophy has not changed much. I have earned income, and my earned income pays my bills, pays my mortgage, pays insurance. You can even view the mortgage as an investment because there's principal being paid down. Earned income can grow over time because you get promoted. You get a 401k out of it, which goes kind of into the bottom half of the sheet where the money has velocity. The money is working for itself. Earned income can throw off stock options if you work at a company that gives you equity or options in the company, RSUs, all of that kind of stuff. So that's the earned income bucket. There's the small business bucket where I use even learnings from the earned income bucket to have a side hustle, if you will. You can consider this YouTube channel a side hustle of sorts, and it's IGL Productions LLC, and it's a web publishing business, affiliate marketing, domaining. I was doing a lot of that back in 2010. Now it's really just PPCE and dividend investing for everyone. But with the small business, what do I do with it? I can reinvest the profit, but also I can put some of that profit down to the bottom part of this sheet and invested in bucket 3. So bucket 3, as you can see, is the investor. That's my passive income. That's where I'm putting excess income from my job. That's where I'm putting excess income from small business. I'm buying dividend paying stocks. I'm reinvesting dividends. I'm enjoying stock appreciation. I'm enjoying growing dividends. And eventually, the dividends will pay all of my bills. My goal, as you can see there, is living off of passive income from investments. I would say the only thing that's changed is back in 2010, I was buying stocks that were yielding 5% or more and growing the dividend. Now I'm buying stocks that are paying probably 2% or more and growing the dividend. I would say these days I'm looking more at yield on cost than current yield, although current yield matters too. So that's a slight nuance and change over the last 12 years since I did this little chart here. But I thought it'd be fun to share this with you today because I want to put out a few things. One, what's your approach? Put it down on paper. Have a multi-tiered approach. Mine has 3 tiers, and those 3 tiers have not changed since 2010, quite frankly. And also, I'd say there's power in documenting. There's power in writing stuff down. There's power in what I did here because I look at this 12 years later. I'm like, oh my goodness, I'm living this. And what I learned is I need to do more journaling. I need to do more writing this down on paper. By writing it down on paper, it manifests into reality. It makes it reality. And so let's as I said out of my conclusions from Starbucks, sometimes it's good to look at the negatives or the worst case because it kind of puts some fire under you to get to that next level quicker, because who knows what's coming. Like I said, 20 years from now is probably too late. And so I want to put some fire under myself. I want to put some fire under the community right now to reach fire. We got to have fire to move quickly, to sprint, to reach fire. Financial independence, retire early. And that's what my three-tiered approach is all about that I did in 2010. If you want to check that out in more depth, check out the pinned comment below where I will link to my Instagram where I shared that earlier today. And please connect with me on Instagram. It means the world. All right, everyone, if you enjoyed the video, don't forget to smash the like button. I hope you enjoyed the video today. And please don't forget to subscribe and check out the comments below. Hit me up in the comments. I try to read them all. Before I go, in terms of a full disclosure, I am long Starbucks, ticker SBUX, McDonald's, MCD, Apple, ticker AAPL. I own all of those stocks in my personal dividend stock portfolio. In terms of a disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. Today's video, it's just for your fun and entertainment. If you're going to go out and invest money in the stock market or anywhere else, please consult your licensed financial advisor first. As I discussed in this video and all of my videos, investing carries risk. It's possible to lose money in the market. And so therefore, it's important to calculate and understand your risks and consult with a licensed professional. I'm just sharing my journey here for fun and entertainment. I love you all. Thank you for watching the video today, everyone, and I will see you in the next dividend stock investing video.